Mahendra Nahata, who's the managing director at HFCL, joining us this afternoon to give us a sense of how the numbers are looking. I'll just quickly highlight the numbers before I go to him. Very strong growth on the top line, some execution likely at play. EBITDA at around 314 crore, margins at 17.2%, and profitability has soared versus the loss of last year, 179 crore on the PAT number. Mr. Nahata, give us a sense what's playing out in the current quarter and what stood out, what led to the PAT surge, what led to the revenue surge. Give us a sense.
Look, there are two things which have happened. The demand of fiber optic cable has increased significantly. And with the increase of demand, the prices have also gone up. Major demand is coming from data center markets, and that has led to demand of high density fiber optic cable, resulting in higher revenue. So data center is one area which has contributed to the growth of revenue and profitability both. And secondly, the defense sector has also started picking up. So that would also contribute to growth of profitability and revenue both.
Okay, so defense and data centers, those are your currently the two segments which are pushing your numbers higher. Give us a sense though, sir, how sustainable is the kind of number that you're clocking in terms of a top line? It's been largely flatlining for a while now. You've seen a bit of a spike. Is this kind of number sustainable?
So it's very sustainable because the very fact that against a revenue of 5,000 crores, we have an order book which is almost 21,000 crores. And we are in process of releasing more number of large orders. So with an order book which is roughly for equivalent to 4 years revenue, these numbers are definitely sustainable. And moreover, we are going into certain new adjacent areas which will further increase our revenue. For example, data center interconnectivity solutions, which are low capital intensive, but revenue is quite substantial. We expect, this current financial year, which is in progress, we got around 400 to 500 crores of additional revenue from data center interconnect products. And that's going to increase to about 1,000 crores year next in the year 27-28. Because of the capacity expansion we are doing. Moreover, we are also going to have a backward integration into preform for fibers. So that would also add into our profitability. So either you take it from the raw material cost point of view or order point of view, which is the most important. With 21,000 crores order in hand, I have no doubt that this current trend would continue.
Okay. Mr. Mahendra, give us a sense with regard to your margins and your raw material costs. How is the pass-through playing out currently? And are you facing that pressure at least over the last maybe month or so since the time the West Asia war has started?
Look, West Asia war has not, put a lot of pressure on us because our raw material is not dependent upon West Asia or either coming through West Asia. Yes, there is some pressure on the plastic raw materials like HDPE and PBT, which contribute to a very small percentage of our raw material cost. Our major raw material costs is fiber or preform, those kind of things, which have not, which have increased, gone up because of market situation, but not because of West Asia situation. And in fact, when the fiber prices have gone up or preform prices have gone up, consequently the cable prices have also gone up. So in effect, margin percentage has become better rather than becoming lower. West Asia conflict has no impact on us.
Okay. And Mr. Mahendra, so give us a sense that what should the journey therefore be? You've got a 21,000 crore order book, which is currently sitting on your book. Give us a sense as to how execution plays out for you. Can you substantially improve execution? What's your capacity utilization currently?
Look, our capacity utilization in fiber is 100%. In fact, we are short of capacity and we are increasing our capacity further by another 25% or so that we can fulfill the demand, which is outstripping the supply position as far as our company is concerned. And this demand, in my opinion, is going to be there for next few years because data center is booming. And moreover, not every cable manufacturer is able to supply to data centers because they need very specialized fibers and very specialized cables, which only few people are able to manufacture. And fortunately, our company is one company which has been able to design such fibers and design such cables also. Very low diameter fiber and very high capacity fiber optic cable. So that is the USP we have got, because of which this sustainability of revenue and profitability both would be there. And moreover, this momentum of growth will continue. Uh, uh, what our estimate is, based upon our execution and at the same point of time, based upon our order book, like we had roughly about 20% increase in our revenue from last financial, in the last financial year compared to year to the last. This year also we believe that with this kind of order book, we should have another 20% increase in revenue.
Defense, how is that segment shaping up for you? Give us a sense. How was this quarter for defense and how is that ramping up?
Look, defense, we have signed an MOU for one acquisition also, which we had reported earlier a few weeks back. That has got an order book of roughly about 2,000 crores. Mostly it is an export order book in aerostructures. And that company, when fully integrated with us, together with the products which we have designed ourselves, for which there is already a 300 crores or so order book in our hand, and we are participating in number of other tenders by Indian Defense Forces. So defense definitely going to contribute. In this year also, it should have a reasonably good contribution, but year next onwards, the contribution would be much higher for delivery of aerostructures as well as orders received from Indian Defense Forces will start. Moreover, we are going into new areas in defense also. We are going into ammunition areas, for which, as we had reported earlier, 1,000-acre land has been allocated to us by Andhra government in Satyasai district. As a matter of fact, foundation stone for our factory with one more factory of, I think, Bharat Forge is going to be laid down by Honorable Defense Minister Rajat Singh Ji on the 15th of May of this 15th May. Foundation stone would be laid by him, which would be an ammunition business for us, which is a new area.
Very, very strong numbers, sir. I look forward to continue speaking with you and wishing you all the very best for the rest of FY27.
Thank you very much. Thank you.
Viewers, I just want to quickly underline. So 1,820 crore